What is going on, boys and girls? How are we doing? Good to see you all again. Good to check in. So, we'll start from the top. Go through BTC. I've mainly just been trading Bitcoin recently. The majority of my positions have been BTC based. We can do a general market scan. We can check up what's been going on in the markets, do a more holistic overview, and yeah, see what's going on, because there have been some big moves that have been made in the space. Obviously ETH leading the charge, and the general crypto markets looking like they are heating up. Okay, if anybody listening or watching can just tell me if the sound and picture are all good, that would be very helpful. Okay, so BTC, actually running 3 positions on BTC at the moment. Good morning, Mary, how are you? So the first was down here, so this position here. Right, so very simple play here. Okay, so first off, we know that we are range bound in this area here, and we had a takeout of this level here. And I put a tweet out around this time saying that, you know, don't be surprised if we do essentially what we did all the way back here, where we did this sort of sweep of a sweep situation, and was prepared for that, but also wanted to sort of place myself directionally on the long side on this second takeout here. So we had the first takeout of this level here, second takeout here, and as we took out this level, was watching keenly for, I was watching the price very keenly in this area. Okay, reason being is because we've taken out this low here, and we put in a nice bit of delta as we did so here. Okay, so a really nice bit of negative delta, which, as viewers of my content will know, this means that market selling was occurring into limit bids who were soaking it up, absorbing it, and we had the reversal. Okay, was tempted to take long here on this candle here, and basically set up a trade position that would have been slightly tighter. Okay, something like this, but didn't do so because we were moving into this pocket of potential supply here, and just didn't really want to long into supply. Basically what this would have been here, if I took my stab here, this would have been a deviation play, and one of my rules for deviation setups is basically can't take the deviation play if it's into a pocket of supply, if we're taking a deviation from the underside, or demand if we're taking a deviation from the top side, because essentially it gives the trade very poor probability. But as you can see, we started to come into this supply zone and start exhausting it completely. Had this sort of fake out back down here into this pocket of demand, and then we started moving up. So basically moved in on this position using the sweep, the deviation, using the delta as, you know, core concepts to sort of weave the trade thesis together, but then also waiting for higher confirmation on the position as well. And this here, really nice structure reclaim on this candle here. So the entry was actually taken here within this hourly candle, just because we've now had that sort of fake out back down. We've exhausted the supply. We've got a really nice clean reclaim of this level in here, and yeah, basically made for a very sensible point to start moving into the market on the long side. So that was position 1. Position 2, where are we? So let's get rid of this. Position 2 was just a simple breakout trade. Was slightly late to this position, could have taken it on this hourly close here, as you can see. I was in the UK at the time and ended up taking the 4-hour close instead. So yeah, very simple trade here. Okay, was just keenly looking at this breakout level here. Mentioned to members of my group that yeah, basically this level is just about, you know, just about okay in terms of taking it for a breakout level, 1.4, 1.5%. Essentially anything that would be wider, right, I wouldn't really take. If it was looking like this, probably wouldn't take it for a breakout level. It was just about acceptable. Also the fact that we had just these touch points in here sort of thing. Really what was happening was we had this supply that was created here on the 4-hour, and that supply was just being constantly exhausted. So the breakout level is really more something like this, okay? And you can see that as that supply got exhausted, 1 tap, 2 taps, 3 taps, broke it on the 4th, which is a classic exhaustion pattern with supply and demand. And you can see here, reclaim that level, start pushing up, and then we get the move. Okay, so super clean price action. Was slightly challenging to take this position, but I'm really happy with the thought process that took place, and it's a lot of personal growth for me. Reason being is because within my trade system, one of the elements is you can't take a breakout position if there is a counter trend delta in the way of your trade, which there indeed was. Okay, so if we're looking at where this took place, this was the first trade here, and then we start moving up, and then basically the breakout trade was into this cluster of positive delta, but I tactfully chose to ignore this delta. And really happy I did so, because this is where that sort of rule bending and discretionary element comes into trading. Essentially, you know, we're all creatures of conditioning. We need to know when to bend the rules, when not to bend the rules, when to be systematic, when not to be systematic. And I personally, you know, we all learn from negative experiences, etc. And personally, I was burnt in this area here. Well, not burnt as in I lost any capital, but mentally scarred from it, because I didn't take this breakout trade here, even though it was as clean as it comes on the higher time frame, as clean as it comes in terms of a technical breakout level, consolidation underneath the level, all the hallmarks of a breakout trade. Didn't take it because there was a giga positive delta candle that was produced. So it's basically just a rule to myself that yes, I shouldn't be taking trades into breakout trades into counter trade delta. But when we do have those super clean higher time frame levels that we're working with, super clean breakout levels that are pro trend, everything's lining up, price is just moving in its direction, that we should basically bend the rules somewhat and just lean into price action only, essentially, was the takeaway. Which I did. I'm happy that I did so. So at the moment, running one trade on primary account, running second trade on sub account, and then we move into a third position, which is taken in this area here, which we're very close to entry on, and this was on a second primary account. Okay, so essentially took this off the back of a 15-minute trigger. So you can see here what we had was a clean 15-minute double divergence across the awesome oscillator and the RSI, price making lower lows, oscillators making higher lows in here, and we do so into this pocket of intra demand. taking out this kilo here. Okay, so this is a classic continuation pattern in strong markets. Essentially what you see is the demand starts to teeter off, price starts to correct. We take out everything in this area, we take out this kilo here, we do so into a pocket of demand. So you've got this sort of sweep into liquidity pattern here, plus a divergence, and all in all you've got a lot of things coming together. Okay, so it's a heavily confluenced trade. In it being heavily confluenced, happy to step down to the 15-minute. Okay, I wouldn't be using the 15-minute if we were using sort of standalone triggers or triggers in isolation. But the fact that we have divergences, very clean across both the oscillators. We've got price diverging as we take out this kilo here into demand here. And I believe there was some delta as well. Yeah, so some nice delta here. Okay, so if we remember what we talk about in terms of delta dynamics, pro trend versus counter trend delta, pro trend delta we should view as 2 to 3 times as large as counter trend delta. Okay, so if we imagine these bars of negative delta here being 2 to 3 times as large, they'd be sort of here or here, right? They would look outstanding on the page, right? They would stand out absolutely and definitely. And in that regard, they would be, you know, very, very big visual cues and triggers to enter into the market, right? So don't look at this and go, okay, cool, well, he's taken a little bit of delta here when there's tons of positive delta here. Relatively speaking, this doesn't look like a lot of delta on the page. It is actually a very significant amount of delta, because as you can see, we have these double bars here. We've got this cluster of positive, we've got this cluster of negative delta, but it's high volume negative delta. Orange bars, not red bars. And because we are very, very much in an uptrend, these are some key signs to look out for. Weave that together with the fact that we've got some really clean price action concepts going on here with the divergences, double divergences in agreement across both of these, into a nice pocket of demand here, which was cleaner on the 30-minute, as you can see here, taking out this kilo. I was actually flying on this day, so I took entry, I believe, in the morning. Yeah, so I took entry in the morning. And then this fuckery occurred whilst I was on a plane, I think, yeah, so 2 o'clock to 3 o'clock sort of thing. So survived the position, didn't have to live through the stress because I was in transit all day. Basically put my stop at technical invalidation, being the other side of demand. And yeah, was just a very technical entry. To take this position and stop placement subsequently as well. At the moment, obviously, the first 2 positions are intact. They're in good stead, printing nicely on those, and this final position is close to entry. You can see we came down here yesterday evening, back to entry. So this position is yet to sort of prove itself, whether we do move up from here or whether we come down, tap into this demand zone again, which is very possible, or whether we just wipe out this low here, in which case I could get stopped out if we decide to take out this low as well. I mean, basically could do something like this and then move up, or it could fully take out this low here, in which case I'd be stopped out of the position. I'm not going to start tweaking stuff on this. I'm happy to just let it run. You know, doing pretty well in terms of the other positions so far, so just letting this run at the moment. And yeah, been happy with my performance on BTC. Just wish it was ETH. I just wish it was ETH. But no, it's been some good trading of late. So yeah, happy running multiple positions on BTC. And apart from that, I'm only currently long one alt market, so we can take a look at that. I was long virtual. Was long virtual in this area. Basically been speaking about this in the Discord. You know, very, very avidly. Why isn't this AO expanding? Deciding to stay thin today. So it's just a super pivotal level here on virtual. Okay, so 12-hour. This is the chart's entire lifetime. I mean, you couldn't paint a cleaner SR if you tried. So if anybody's thinking about moving in on virtual, either taking a long position or spots, you know, in this area here is really as clean as it's going to come. Just, you know, I try and abstain from taking SR reclaims, SR flips, that sort of thing. I tend to move into sweeps, SFPs, supply and demand plays, primarily in terms of left side price action. That being said, this is so clean. So I was long in this area, came out around break even in this area here. Only reason is because I wanted to, basically my risk at the moment, my open risk is pretty high, even though I'm just long BTC and I was long virtual. So I'm not long multiple markets, but because I've got so many positions running, the open risk is fairly high. What I mean by open risk is how much risk do I have open in one direction. Okay, so the direction I'm talking about is of course long, aligning with the trend of BTC, and wanted to basically reduce my open risk and reallocate because although this is a very clean, very nice market to look at, very appetizing, what was even more so, in my opinion, is this market here. Okay, so SPX, again, looking at the entire lifetime of the chart's history, but instead of an SR reclaim, we're taking an SR breakout, which is preferable for me in terms of what I'd sort of prioritize in terms of triggers. As you can see here, clear touch points, 1, 2, 3, 4, 5. With the fifth, we've got this consolidation underneath the breakout level. Now we're moving up and we're basically at the sticking point here. Okay, so it's going to be hero or zero for SPX in this area, in my opinion. Reason being is because we're interacting with this high here, the last trouble area, which is always basically what we need to watch out for when taking breakout trades. And if I'm honest, this wick here was what was making me, I had to think about shifting over the risk from virtual to SPX because of this wick, right? So when I think about moving around assets, right, moving around risk, it is very deliberate and there's a lot of thought that goes behind it. I do go into deep analysis of the charts that I'm looking at. Something as small as this wick, which may be overlooked by many people, is something that I think about to quite a great degree. Reason being is because, look, if we didn't have this here and the only wick we had when we were working with would be this one here, for instance, let's say this was the highest wick in this area here, these two wicks, then what would have happened is, as we confirmed the breakout, right, as we confirmed the 12-hour breakout, which then also dominoed into a daily breakout, if this wick didn't exist, then we would have basically overcome the last trouble area and we'd be in price discovery, right? There'd be nothing here to worry about. There'd be no last concerns, last trouble areas, last hitches that could get in the way of the trade. We just basically be in smooth runnings, right? And that's not all we had, of course. We've got this this last wick here, which basically still means that there's an SFP on the table, right? There's still a potential swing failure here. As you can see, we do have those interactions and we have started to failing here. But I still wanted to move into this market because I knew that yes, we could potentially fail in this area, but we could also just move up. And this has been a super strong market with a very, very clean higher time frame breakout. And we have two things, zones and levels, as sort of buffers to this trade as well. So first, obviously, the support level here. Second, the consolidation underneath the support, which is always why it's really nice to take sort of these higher time frame breakout trades, because you're more well protected. You've got very clean and clear invalidation, right? We've got basically two sort of levels of armor, if you wish, to the position here. First being the support level, second being the consolidation, aka the demand. And you can see what happens already as we tapped into that demand zone here. Got a reaction with that buy up on the wick, and yeah, basically yet to see whether this position survives. I anticipate we'll either close back underneath this level. If so, we'll likely cut for minus 0.6, 0.7, or get scorched, go for the full 1 hour loss, or we run it up and go for this sort of 5R or whatever it is on SPX, because if this starts moving to the upside, I imagine this will be a nice runner. Okay, so yeah, basically that's me running through the positions I've taken over the last few weeks. So let me know if you've got any questions in the comments, and we can then move on to a more holistic market scan. Look at BTC, look at ETH rather, Sol, totals, dominance, etc., etc. Okay, so moving on, let's have a look at some markets. Let's still look at BTC on the higher time frames. Okay, so still got this potential divergence in play here. Again, I have to stress this over and over again. Please don't think I'm predicting a divergence to occur. I'm simply observing what could happen in the markets. Okay. And what could happen is this here, right, where we get the agreement across the oscillators. Basically what we need is a red monthly to print to lock in the divergence. Now, let's say we get a red monthly that locks in next month, for instance. That could mean doom and gloom. But it could also mean that we simply just range in this area. Okay, we create a higher time frame range. ETH goes mental, alts rally, etc., etc. So, even if this divergence locks in, it doesn't mean that it's game over for the markets at all. It could just mean that sort of mind share is shifting. BTC is obviously, this has been the BTC cycle so far. So some cool off could still be welcome, and still bullish for the market overall. Just something that I'm monitoring here. What we could also do is just rip higher, invalidate this divergence completely. As you can see, we're getting pretty close to that point here. We're not far off. Another green monthly candle of this size would probably do the trick. So yeah, just keeping eyes on this consistently month on month, okay, just to see how it's all developing. Weekly, super clean, very, very strong, no cause for concern at all. You can see that we've sort of put this leg up in price, which looks like a divergence in terms of price structure, but as you can see, nothing going on here. On the RSI, still very, very clean, very clear, very bullish, okay. Going down to the daily, you can now see that we're talking about this level here that we were just monitoring in terms of the trade evaluation that I ran through, and then down to the 12-hour, you can see that even cleaner. So yeah, very, very, very clean bullish signals on BTC. Everything trading very technically. Wiped out this low here. This is just as as clean as it comes in terms of price action. Okay, so we've got that strength, impulse to the upside, range, move up again, take out the low, break out here, consolidation prior to the break. It's all very, very technical. It's very, very technical and very directional. Okay, so those are the main reasons that I've been trading BTC primarily, is because A, it's the most directional market, right? So we can align with the trend as best possible. And B, because it has just been trading very, very cleanly of late. So, covered BTC, I think it's time to look at the monster that is Ethereum. Let's just clean this up a bit. Now everyone knows ETH has a tendency, anyone that's been around long enough, to blindside people with its pumps. And you can see that's exactly what's happened here. Okay, so a few months ago, things not looking so great for ETH in this area here. But as you can see, in hindsight, just a reclaim over here of what would be probably 3-month demand. Okay, so super, super higher time frame demand here, taps into it, and then starts moving away. And had some really, really big moves recently. Okay, so very big moves. Even this last week on Ethereum, okay, up 25% plus, I believe. And yeah, looking very, very strong. Okay, looking very, very strong in this area. So essentially, what my eyes are on really locally is this sort of level in here. Actually, it probably make more sense to chart this on the daily. Okay, so looking at the daily chart, this is a very, very key level here. What we really want to be seeing is price to move up, interact with this level, consolidate, break out, give us a clean trigger. You can take this long, you can take this spot, or not take it at all, and just know that it's going to be very good for your other alt spot bags. Yeah, looking super, super healthy in this area. This is what my eyes are on. Would very, very much like to see consolidation in this area, preferable to even price just ripping through this, because that would mean more chance of an SFP or deviation is on the cards as well. So I want to see that consolidation as we approach these levels around 4K. This 4K breakout level here on the daily, super, super pivotal. If we can start overcoming this level here, right, and holding above, then really there's not much that stands in the way of ETH. Okay, obviously next stop from this is price action. All-time highs at 4.9s, right? We're at 3.5s at the moment, so we're making some good headway. And even if things take a bit longer than we'd hoped, we've also now created a really clean pocket of weekly demand here, as you can see. Right, so even if price starts failing in this area, comes down to retest this liquidity down here, and then starts moving up, and then consolidates, and then reclaims, that's still all good. Okay, I know everyone's getting incredibly excited about ETH making moves, and have been promised the mythical alt season for far too long. But look, things will unfold as they unfold. At the moment, ETH has turned around what was a fairly ugly situation, losing this level in here, especially. From a market structure perspective, this was looking pretty bleak, right? So here, this low that was made down here, pretty bleak indeed. But now we've reclaimed this SR level in here, put in obviously some big moves of late, and things are starting to look a lot healthier for ETH. So I think everyone in the space should just be grateful for the moves that have been being made on Ethereum. Okay, so take a look at ETH BTC. I put out this shameless bull post on Twitter the other day and just said, you know, last time RSI dipped this low. This has actually been the lowest that the RSI dipped ever, right? In terms of, so April 2025 on the weekly time frame, the lowest that the RSI has ever dipped. Okay, the lowest previously was 24 in 2019, and you can see that basically marked the low of this massive move up, and the last alt season that we experienced. And we've now dipped down to the 23s. You can see very similar patterns here. Okay, so we just sort of bleed down. The structure of the RSI very, very similar across both of these patterns on the RSI here. And we shall see. We shall see. Okay, it's very difficult to sort of chart and, you know, go across technicals on markets such as ETH BTC. But we'll see. We'll see if anything comes of this. Okay. We'll see. We just have to watch and wait. On the sort of investment side of things, I'm still allocated. I've been allocated for some time. If we look at the Hype USDT market, went through this on one of my lives that I was moving in around this area here on this reclaim. This is 90% of my spot holdings, to be honest. So this reclaim here, I moved in on at 19, I believe it was, on Hype, now at 44. Been very, very fortunate, very lucky on the spot side, to be honest. Hype's been one of the biggest movers. I'm not one for fundamental analysis, right? It's not really my forte. Was just hearing very good things about Hype. Chart looked great, and wanted to move into more of the higher cap stuff, as I've been burnt on the lows and the micros over the years. And yeah, basically don't let greed get the better of me these days. Would only move into lows and micros if we start to hit the latter ends of the cycle clearly, and we start to see them moving. Would like to get more confirmation first on that side of things, as opposed to just hoping, holding and hoping. So yeah, wanted to move into a high cap. Hype was my market of choice, and so far it's been a very nice spot bag to hold. So been allocated, yeah, a good few months on that side of things. So what else can we look at? Total 2 is looking incredibly healthy. Right, so we look at it on the weekly, both totals, total 2 and total 3. I mean, what a beautiful chart on the higher time frames. Honestly, we've got this level here that we're working with. Whether we see some consolidation in this area here, or whether we simply just rip through, both outcomes are looking very, very nice. I mean, in terms of market structure, this is basically as clean as it comes. The trend very much still intact, okay, despite overall sentiment. I think this cycle has been incredibly novel, brutal and horrible for most people involved, right? I've spoken to a lot of people, from traders, investors, new retail, people that have been around for a long time, old boys in the market, high net worth individuals, fund managers, people that are very well connected, and everyone seems to be in agreement this has been the most painful cycle. But looking at this, it's like, okay, cool, what's really happened here? It's more of an emotional reaction to what's been happening, okay? And yes, it's been harder to play for sure. But all in all, right, this isn't even including BTC here, okay? Things aren't looking too bad. And you may look at this and go, okay, well, this is just basically Ethereum that's been pushing this. But even still, I mean, look at this. This is total 3, excluding BTC and Ethereum. It's a very similar picture, right? It's a very similar picture. Right, we've still got those lows intact. Everything's still looking very good, very bullish. Very bullish market structure here on the higher time frames. It's a prolonged cycle, right? In my opinion, things are just taking a lot longer to kick off, but I think they will. And it's just about being patient right? If you're struggling in these conditions, get a hobby, focus on trading, journaling, reflecting on your journals, sharpening your edge, whatever it is. Start another business, whatever you want to do. On the spot side of things, I think it is just a case of patience, right? And not letting that sort of time decay, time-based capitulation wear you down, right? And the more you engage with the markets, I'm speaking from an investment side of things, but the more you engage in the markets, the more likely that is to occur, okay? BTC dominance as well, looking particularly interesting, right? And the reason for BTC dominance looking so interesting is because I know people have been trying to call the tops on this multiple times, and even myself, I was, basically marking out these levels in here and saying, okay, potential diagonal break here in this level, etc., etc. But something has actually occurred recently, which has been pretty notable, which is the first weekly double divergence in this area. Okay, so we've got a clean spiked div here, right? It's very technical. We haven't come down to the mid-level to reset. Both peaks are still technically in the overextended region, despite it being on the weekly time frame, and we have that agreement on the awesome oscillator here as well. Okay, so it's the first double divergence on the weekly time frame on BTC dominance, right? Bear div. If you look at what's happened over here, right, there's been nothing. Okay, this has been a higher high on the RSI. This is just an overextension. Again, another higher high. We haven't had anything which has been like this. Okay, lower highs across both the awesome oscillator. We haven't even had lower highs on just the RSI, right? Let alone agreement on the awesome oscillator as well. So looking very interesting, right? If BTC dominance is to fail, this is truly my stab at where I think that top would be. And if it then goes on to invalidate this, we've even got the loss of the weekly level, which is locking in 1 day, 15 hours at the end of the week. And yeah, this is as good as we're going to get in terms of a top signal on BTC dominance. If it invalidates this and just starts doing this, then I mean, it's the BTC only cycle, right? I'd probably say goodbye at that point to any possibility of alt season occurring. I think it's kind of a now or never situation, looking at just how clean this signal is on dominance, right? We're not going to really get a better chance at it than we are here. Just my 2 cents. Just my 2 cents. Okay, obviously, I'm already spot allocated. So I'm not really looking to make any moves because I've already been, my portfolio was sizable. Now it's bigger than obviously I intended to start the cycle with, so to speak, because of the moves that Hype's made. So yeah, I'm locked and loaded, but if you're not and you're waiting for a time to enter into the markets, I'm going to hang my hat on it and say this is probably the best sort of signal you're going to get. ETH BTC dipping down here with the push, ETH giving 25% across a week, BTC dominance, weekly divergence, right? Things are starting to sort of weave together. And then even looking at just like, if we just run through the general markets as well. Been running through this. I do private streams with my Discord every week, and just been running through some of the markets here, and you'll start to notice some patterns that are sort of repeating themselves on the weekly time frame, and it's this here, right? So Aptos, one of many markets that's printing this structure here. Weekly awesome oscillator, divergence, right? Price making lower lows. The awesome oscillator curling up here and making higher lows. And all we've got to do is just scan through some of the markets. We've got another one here on ARB. Again here, Arkham. And when you start to get these sort of higher time frame signals that present themselves board wide, right, market wide, it's likelier that they're going to play out, right? It's likelier that this is more organized, right? This is more intentional than meets the eye. You can see how many markets are displaying these patterns here. Obviously, if markets are being slightly stronger, then, and it's not, you know, not every market is mirroring these moves. You know, AXL not making that lower low, but many markets are doing so, even if it's subtly, just like here. Okay, price is still just making a lower low in this area, and yeah, it's an interesting picture that the market's starting to display overall between ETH's moves, ETH BTC dipping down as low as it did, and pushing away off that 23 point on the RSI. BTC dominance, weekly divergence, and then these sort of, well, weekly bearish divergence, and then these sort of bullish divergences that are forming across the awesome oscillator across multiple altcoin markets. It's one to keep a keen eye on for sure. Okay, things are starting to look very spicy, starting to look frothy. We just need to see a real push away. Obviously, all of these markets are very much unconfirmed. We need to start seeing price reclaim levels, right? For instance, here, key level. Okay, we need to see stuff like this start getting reclaimed for us to have more faith in continuation. Ultimately, I'm still not looking at markets like this on the long side, right? My system remains very much unchanged. Every week or 2 weeks, I'll scan through these with my Discord group, and we'll look to see if any markets have become outliers, i.e. have they become strong markets. If they have done so, then I'll basically pop them into a weekly strength list here, and this condensed list of altcoins is all I'm looking to look at in terms of placing long positions. It's been a strategy that I've employed this year for the first time, but it's basically a method and sort of philosophy that I want to adopt going forward, because my performance this year has been good, very good, right? So it was like a 45, 50R or 60R even across the span of a month or two ago. And that's basically just from looking at condensed list of the strongest markets, again leaning into the theory and concept of we play into the strongest markets in bull markets, and we play into the weakest markets in bear markets. So again, when we do have our bear market to follow, I'm going to be very much leaning into a weekly weaknesses list, and essentially it means that I'm more laser focused, right? I'm honing in on just a select few markets. I scan these 3 times a day. First thing in the morning, I'm looking at the 12-hour time frame, daily time frame, 4-hour and hourly. And then at midday and at 5 p.m. I have 2 more alarms to do rescans just on the hourly time frame. The morning scan, alongside me doing my traditional markets as well, takes me just 12 minutes every morning. The midday scan takes me 5 minutes max, and the 5 o'clock scan 5 minutes max as well. So all in all, I'm spending 22 minutes maximum charting every day, but I feel way more connected than I've ever done to the markets. I know exactly what each market looks like. I'm able to truly focus in on each market, and my probabilities of winning trades are multiplied by great factors because I'm focusing on the strongest markets only. So all in all, it's a win-win-win, right? You know, back in the day, bull markets would be occurring, and I'd be scanning 400 plus markets, not really knowing what's going on, setting multiple alerts, and just being a lot more scattered. Now, select a few markets, know exactly how they move, how they trade, sizing up to more of a degree because I've got more confidence in the play out of the longs, because they're within this watch list, spending less time at the screens, and yeah, it's basically just been a winner all round. So very, very much recommend this method of scanning and charting if you're not already doing so. Weekly strength in bull markets, weekly weakness in bear markets. Keep it super simple, align with the trend. So we can do a quick scan at the moment because I haven't done mine for today. Knew the stream was coming up. Yeah, some markets like BNB looking just unbelievable, right? Just inches away from price discovery here. Looking beautiful indeed, right? So again, it's just about aligning with the strongest markets, right? Not buying or longing assets just because they look deeply discounted. It's purely a sign of weakness. And it took me way too long to really understand and embody that notion of long strength, short weakness. An embarrassingly long amount of time, to be honest. But once I clocked it, honestly, changed the game for my P&L and performance. So I got alerts like this on Kaito. Was going through this with the group yesterday and just saying would like to see this isolated low taken out, would give a really nice long opportunity, but also if we do start rallying across the board, then we're going to have to focus on trend side triggers. What that means is breakout longs, because we likely won't be getting those dips down. So again, we have to adapt and evolve to the trend and the strength of the trend in particular. Pendle looking decent in this area here. Would have preferred to see this come up to here. It's a very gappy breakout level to be working with. That being said, let's see if we've got anything here. Yeah. So we've got this sort of cluster of higher time frame supply in here. Yeah, would not be moving into this position, right? Basically, when I'm taking my breakout trades, I want to see the left side area devoid of any price action. So not ideal in this area. Sui, nice pocket of 12-hour demand in here. I'll set an alert at the high. So we'll look for lower time frame divergences, ideally into the zone here for a good long. It's been a nice market of late. TRX still moving. TRX and XRP been the biggest rippers of late. Still moving off the back of the weekly resets here. You can see that point here. I was extremely vocal about these resets, right? TRX and XRP, and just talking about how you couldn't really get a simpler trade in terms of moving into a spot position. You know, these were the cleanest markets to do so, and you can see the subsequent play out here. If you don't believe me, go back to the last lives. I was documenting this all in real time. Higher time frame resets, higher time frame RSI resets like that, exact taps to the 50 level are as clean as you're going to get in terms of continuation signals and should not be faded. Again, virtual, clean 12-hour SR level, covered this earlier. XMR is just really having a massive cool-off period at the moment, but I do expect this to continue to the upside. Very, very strong market on the higher time frames here. XRP, absolute beast, absolute beast. Just showed you the weekly, so you can see. Yeah, doesn't get stronger than this, right? $30 inbound. Syrup hovering above these lows. As you can see, got alerts here at these stacked lows. Would prefer all of this stuff to not be here, but we'll see what we get. Right, we'll see if we get any good confluence if we take out these levels here. Let's go back to the 12s. SPX, we've covered this position already. Kaya, again, a very good example of those lows being sort of unswept. I very much thought I was going to get a trigger in this area. Saw the AO curling here on the 12-hour and wanted to basically get this sort of trigger like so. Didn't get it, right? We just hovered, came back, retested, teased again, and started moving away. So if things start to get more frothy, expect your lows to be left unswept. It's a common thing in bull markets, and highs unswept in strong bear markets as well. Pengu's been really pushing, right? Really pushing over the last week. Again, got some alerts set here. Will we get them? It's tricky with markets like Pengu because you want to get long. You go down to the hourly, see if we can snipe any sort of entries. I mean, the only thing that we've got here is this low, right? But if we don't get the low, we don't get the low, so we have to start looking at the upside. And all we have in here is just this initial level here. But again, these touch points are just way too close to really sort of use this as a breakout level at the moment. We'd have to see something like this form. I'd at least want one more touch point plus consolidation, right? So one more touch point plus consolidation. We're really sort of rubbing the crystal ball, and it's a very hopeful thing. The probability of this actually occurring is quite slim, okay? But this is technically what I'd be looking for in terms of giving a technical trigger to enter. If we came up here and just started consolidating in this region here, that's not really good enough, okay? Because there's just not enough touch points. Really, we want 3 touch points well spaced out. We have 2 touch points not well spaced out in this area here. Okay, so regardless of strength, you know, I said it in the Discord recently. I've been harping on about this. You know, things are starting to look very strong, right? They're pushing away, but just don't start bending your rules too much yet. Okay, if things start going parabolic, board wide, then fine. We can really start dropping our stringency down to the floor. And moving in on isolated triggers, but at the moment I still want that confluence. I still want to keep my stringency high. Been trading well this year, and I think part of the reason I've been doing so is because I haven't been getting gassed, right? I haven't been getting too gassed up about the markets, and haven't been letting that sort of greed and FOMO emotional element take place. I'm still looking to keep my guard high. Still looking to I still want to see those technical triggers for entry, and I'm not going to start bending my rules quite yet, okay? If things start getting truly frothy, and it's not just these outliers like Pengu, but everything starts ripping, fine. I'll be moving down to the 15-minute, even 5-minute, taking simple plays like this, right? This is just all I'll be looking for, right? Or just this, okay? So it's either diagonals, right? Simple diagonal trades like this, right? With assisting market structure, okay? So I want to see those lows climbing. Essentially just looking for triangles, right? It's just looking for symmetrical triangles in the market. Or we're looking at these horizontal breakout levels that we've been talking about a lot of today. Again, I want to see those ascending lows. I want to see that market structure. But again, you know, moving down to the lower time frames to execute on these, I don't need any supplementary confluence. I don't need to see delta, divergences, speed, nothing like that. You won't see them in these setups. It's just simple price action plays, moving in on strong markets, slamming open risk very high, you know, going gung-ho with it, and and trading like a maniac, basically. But at the moment, we're not there. Okay, we're just not there. And I want to let the markets to sort of decide and determine when I flip into that manic mode, and start dropping that stringency ever, massively so. But at the moment, we're just not there, and I want to keep that guard high. I want to keep stringency high. I want to keep the emotional side of things in check, discipline and patience, etc. Still just be a silent observer of the markets. As you know, 3 running positions on BTC because BTC is the strongest market, right? So I'm still looking to play into the most directional markets. At the moment, despite all the altcoin madness, I am only long SPX. Okay, so yeah, I'll wait for the market to tell me when that should change, basically. Although we're taking out this watch list. Okay, so now we'll do a 4-hour scan. Run through these a bit faster. So yeah, like I say, the sweet spot for me in terms of scanning is daily or 12-hour, 4-hour, and 1 hour, right? You get a really nice, clean, holistic picture of the markets by doing so. And as I scan, my eye is looking at price. If I see anything interesting in price, then I look at the indicators. Okay, so that's the sort of method, visually speaking. Down to the hourly. I hope this though doesn't get taken, but it does look ripe. It does look very ripe. So we'll see. I think what I'll do is I won't adjust the stop on my current position. But if we do take it out and I get stopped, I'll look to re-enter onto that 3rd position. And like I say, even scanning these markets, I know even what the hourly picture looks like. I don't even need to see the ticker in the corner. I know that this is TRX, right? I know the markets that I'm looking at, and that sort of intimacy that you can have with this reduced watch list is, in my opinion, a game changer. It's invaluable. It's been really, really nice, much more enjoyable, much more profitable, and a general no-brainer. I can't believe it's taken me this long to sort of figure that out, to be honest, this far into my career. Nor have I seen it really around. I know people focus on strength, but they still then scan full watch lists, etc. And for me, that just doesn't make sense anymore. Right, boys and girls, I think we're going to cut it there. Been nice catching up with everyone. I will catch you all next weekend. To members of my group, I'll see you in the lounge, and to the rest of you,